Hey, good evening and welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. I'm here for about half an hour to answer your questions around investing in property. So first of all, we're just going to get live on a few of the platforms. So on Instagram, if you're just joining us, thank you so much for joining us. This is live Ask Me Anything About Property Investing. TikTok just joined us as well. Thank you so much if you're watching on TikTok. Now, just let me know you can see and hear me okay, whichever platform you're watching on. We're live on Facebook, LinkedIn, YouTube, Instagram, Twitter, TikTok. Wherever you've got a question, make sure you pop it into the question section or the comment section on that platform that you're on, and I'll do my very best to answer that question for you this evening. So first of all, I just wanted to say thank you so much for all those that attended the property meet last week. We didn't have one of these sessions last week. We were just so wrapped up in trying to get ready for the main event for relaunching our monthly property meeting. So at the meeting, I'd said I'd be running networking meetings for nearly 10 years. It's almost 10 years since I've been running formal property networking events. And so relaunching this one last week was such an exciting time because we'd not been running anything for about a year and a half, nearly 2 years. And to have 200 people in the room is absolutely phenomenal. It's definitely the largest networking event outside of London. And we booked at that venue for the whole year. So we will be having monthly meetings there. We don't do one in December. We don't do one in August. So we're restarting again in January. So make sure you get yourself booked onto that. An opportunity to network with lots of like-minded people on a similar journey, learning from each other, learning from myself, learning from some great speakers that I'll be bringing. So I've got some amazing speakers lined up. I can't share the details just now. It was just phenomenal to have Neville as our first guest speaker. Neville, the guy that built a business and sold it for 70 million to Morrison's. He built 600 houses. He's got a massive commercial property portfolio, been investing in residential property since the 60s, worth over 100 million pounds. He was sharing his knowledge and experience last week with us. So those that were there know how great it was. In fact, if you're there, just let me know your thoughts on it. And we'll get started with our questions in just a moment. Whichever platform you're on, just ping or pop it in the comment section and we'll do our best to answer that for you. So let's get our first question up then this evening. So our first question from YouTube, Flipping iPhones. Hi Saj, what would you say is the main difference between a letting agent and a management agent? Well, actually, they're very similar. It just depends on the context that you're using them in. Traditionally, a management agent would look after, say, larger buildings, blocks. They manage what happens on that property. A letting agent tends to refer more to residential and some commercial property where they're finding a tenant for that property. So the lettings part of the service, as it were, is finding the tenants that are suitable for the property. The management part is the ongoing looking after of the tenants and the property when the tenants are in the property. So the two slightly different things, but overlap as well. And mostly that you'll find within the letting space for residential property, you'll find agents call themselves lettings and management agents because they offer both services. So for example, in our letting agency, we do the tenant find part, which is the lettings part, vetting the tenants, find the suitable tenants, get them approved through the application, get them ready to go in to the property. And then also we will then do the ongoing management of that property, which is looking after the property, the routine inspections, managing any maintenance that needs to be done on that, and of course managing the tenant that's in the property as well, dealing with any issues for them, collecting the rent as well. So they're the two parts of the service, if you like, that what we normally would call a letting agent would do. Hope that clarifies what you're asking. Now, I just want to make sure you can see and hear me okay, whichever platform that you're on. Just give me a quick hello, give me a wave from whichever platform that you're watching on. And if you were at the property meet last week, let me know. As I said, we had about 200 people there last week. Absolutely blown away as our launch meeting. We booked up that venue for the rest of the year, for rest of 2022, all of 2022. We're starting in January again. 18th of January is our next meeting. And I'd encourage you to book on early because when the tickets got sold out at the last event, people are quite surprised that we'd sold out so quickly. And people are struggling to still book. So make sure you don't miss out. Let's get our next question up then on the screen. This is from Alec on LinkedIn. Hi, Sad. From your videos, I know you're working on developing properties, including your own home. What's your current experience and outlook on ground material and prices and supply. Well, Alok, I think it's a really important point that you make there. Right now, costs are rising for materials, rising massively in the last few months. And also what you find is labor costs are now starting to rise as well, because a lot of trades are busy, they're charging more money. So your construction costs are rising quite significantly. And I was speaking to a developer friend of mine just a few days ago, less than a week ago actually, and sites that they were looking at. So they were also looking at projects that they were putting offers in right now. And by the time they actually come to build them, that might be a year or 18 months from now. And the expectation is that the prices for materials and labor will have settled again. So you've got now a shortage of labor, skilled labor. You've got materials not being able to get to where they need to, and transportation costs being higher than they need to. Hence, the material prices are much higher. But what happens in a situation like this is other companies will see an opportunity. Like, for example, last year when there's a shortage of plaster, you started seeing huge amounts of plaster being from other countries. A friend of mine was bringing container loads of plaster in from Turkey, literally several containers a day, because what they do, they spot an opportunity and they fulfill that demand. And what I think will happen is, because now material prices are quite high and labor costs are quite high, you'll start seeing other people wanting to fill that gap and deliver that service and fulfill those materials. That'll create more competition and the price will probably settle. It might not happen immediately, but over the next few months, it'll probably settle. So the conversation we were having last week with a developer friend, it was really, when we're looking to develop in, say, in a year and a half's time, those prices will have settled again. But if you're looking to develop now, immediately, then you've got to build in, and your costs are going to be much higher than they were, say, a year ago. So Alok, I hope that helps. Our next question is from Instagram, which is just on this camera over here. Property is the way forward. Best way to get to rent service accommodation. So I think the question that you're asking is, what's the best way to get into rent to serviced accommodation? So where you're taking a property on from an owner, a landlord, and what you're effectively doing is repurposing that property for short stay rather than traditional lets, and then you're making a margin in between. That's essentially what you're doing when you're doing rent to service accommodation. But you're delivering a better quality product, i.e. it might be nicely presented, furnished, and the service that you're providing, linen change, for example, cleaning service. So you're doing way more than the person that you're renting the property from, and that's why you're making a profit. So the easiest way to get into it, firstly, I would look to see there's a demand for what you want to do in that area. So you look at the likes of Booking.com, Airbnb, look at those platforms and see who else is already advertising the kind of properties that you're thinking about right now. How busy are they? What their diaries look like? You know, is there sufficient demand? Does there seem to be sufficient demand for what it is that you want to bring to the market as a product effectively? And what's the price point that they are working on? Now, if those numbers can work, you can get all that to work. There's demand there, the price is there, it's profitable. Then you've got to find the property. And then where I would normally start is friends, family, people you know in the area, network, contact, connections. Start there first. Then I would look at agents. And the third step would be looking direct to vendors. They're the three steps that I would follow in terms of sourcing rent to service accommodation. So firstly, I'd go to my existing network, friends, family, contacts, connections, any form of networking contacts that we have. Secondly, going straight to letting agents to try and find property that way. And the third way will be marketing direct to the owners of the properties. So I hope that helps. Let's get the next question up on the screen, please, which will be on in a moment. This is from Instagram, again on this camera just here, Lena. How do I get through referencing with a part-time job? I know I could use my partner as a guarantor as they have a full-time job, but will this work? So when we talk about referencing, again, I'm assuming you're talking about rent-to-rent. When you're taking a property on, it might be from an agent, and the agent wants to take you through the normal referencing process in terms of your ability to be able to pay the rent. So there's a number of ways that you can deal with this. So, for example, one of the ones you mentioned is the guarantor. So somebody who can stand by you and say, look, if for any reason Lena can't pay the payments each month, we're here and we'll take the responsibility and we make those payments. That's essentially what your guarantor was saying. Of course, if you had the financial means, it might be you can pay a certain amount of months rent in advance. So that gives them certainty, security. For example, let's say you're always 3 months ahead in terms of what you'll pay. So if there's an issue or you're not paying, there's plenty of time to protect the landlord if they have to take the property back, for example. But ultimately, it's asking the agent that's doing the referencing, look, what reassurance is it that the landlord wants from me in order to make this work for us both? And you'll be transparent with the fact this is a new business, you're starting out. It might be you're even paying slightly more than what other people were paying. But remember, you still got to make it profitable as well. So make sure you do your numbers correctly. Sometimes you can look at a bond, insurance. There's various things. But often I find just by talking to the owner of the property, if you're able to do that directly, understanding what concerns they might have and look at what could be put into place to reassure them, because you're going to probably spend some time and money making that property nicer. The landlord's concern is, what if you don't pay the rent? What if you cause some damage? So you're probably going to have cleaners in there much more frequently than they would as a normal let, probably every week, every few days. You've got cleaners in the property. The property is going to be looking fantastic because you want to run it as rent to service accommodation. If you didn't pay rent, the landlord could quite easily take that property back because it's more of a commercial arrangement rather than a traditional tenancy agreement where they've got to serve you notice, go through court, take ages. They can take the property back much, much quicker. So when a landlord understands this, that their position is protected and you're not likely to mess about, then it just gives them some reassurance. So that's what I find is my preference when you can speak to the owner directly, understand their concerns and see what you can do to reassure them. And you may not always be able to do that. You might not be able to speak to them directly. You might not be able to reassure them. They might just send you back to the agent and say, no, just go through the referencing. And you're not necessarily going to be able to do this successfully in every situation. But this is what I find works better. So Lena, I hope that helps. Let's get on to our next question. This is on TikTok, just over here on this camera. Could you talk about landlord letters? What should they include? Do's and don'ts. So when we talk about landlord letters, what we're doing is we're talking about marketing directly to the owner of a property, i.e. landlord of a property, for you to take that property on. That might be for rent to HMO, rent to service accommodation. It might be a lease option. It could be just an option agreement. It could be for development opportunities. But really what you're doing is looking to get to the owner directly of that property to have a conversation. Just as I was earlier explaining to Lena, that if you can speak to the owner directly, you're in a one-to-one dialogue with them. You can understand the concerns and deal with things. That's why I believe it's a better way to be able to find properties if you can go direct to the owner. But it takes a little bit of skill. Firstly, to be able to get them to respond to you, and secondly, how you negotiate with them as well. But all these things can be practiced. They are learned skills. Nobody's born with these skills. These are just things you practice and you get better and better at. So what is it that needs to be in a letter to get somebody's attention? Well, firstly, you need to think about basic marketing concepts. And really, sometimes people talk about IDA, which essentially is getting someone's attention. First of all, you've got a headline message, and what you're doing, you've got your call to action in there. So you've got simple marketing that you're doing to grab somebody's attention. So first of all, your headline in the letter should be something that would capture their attention. And secondly, it's a brief reason as to why they should be reading this. And thirdly, like a call to action in terms of getting in touch with you and reaching out to you. So the way I would look at this and the way I've done this marketing is I do what I'd call a 3-letter campaign. The first letter really just says, hey, really interested in talking to you about your property. Now you've got to weave some angle in as to why you contacted in the first place. Let's assume it's a rent to rent. And it might be a case if you're looking to rent or sell, then I desperately need to speak to you. Please contact me on this number, as a matter of urgency. I think we can certainly help you. So you've got something that's beneficial to them. It's urgency that they need to contact you quickly. You're eager, you're desperate to kind of speak to them, which intrigues them a little bit. Why is this person so eager? They might even be thinking, ka-ching, ka-ching, this person's desperate. Not that you're necessarily going to pay more money, but what you're trying to do, if you think about what's the outcome you want from that letter, the outcome you want is for them to pick up the phone, call you and start a conversation. And that's what you've got to be focused on, that how can I get them to respond to you? And then I would give one method for them to be able to communicate with me, which is a phone number, preferably a mobile. So they might text you or WhatsApp you, but they've got one form of contact as opposed to, having lots and lots of different things. Sometimes I see letters with people got loads of social media contacts on there. They've got phone numbers on there, addresses and email addresses. It's just too many ways for somebody to communicate. It's not necessarily making it easier. I would just have one method, powerful point about why they should contact you, encourage them to contact you. So that'd be the first letter. Then a couple of 2-3 weeks later, I'd send another letter just to remind them that you've not heard from them and say, look, I'm really eager to speak to you. You might have missed my last letter. Please come back to me. And then the third letter often is a case of, if you've sent a number of these, you might be starting conversation with other people. You'd say, hey, look, I'm looking at something else as well, but I'm really keen to speak to you before I make a decision on something else. And now what you're doing is, if they're sitting on the fence, you're just trying to say, hey, look, if you haven't already and you've been thinking about this, come on, let's respond to me. Let's start a conversation. So what you're doing is, in those 3 letters, you're capturing the attention of people that are interested. They'll contact you straight away. You're capturing the attention of the people that are not quite sure. They're sitting on the fence. They thought, maybe not. Maybe I'll do it later. I'll come back to it. I'll ask Mrs. discuss it, then come back to it. You're trying to get them as well. And the people that are not interested, I would not focus on them. The reason for that is it's much easier to work on the people that are interested and sitting on the fence, as opposed to those that are not interested. And the vast majority will not be interested. And that's okay. You have to accept that. So I hope that helps. I hope it gives you some pointers in terms of landlord letters. Let's just get our next question up. This is from Jordan on YouTube. Hey, Saj, hope you're well. Do you invest finance into beginners' property businesses? Thanks. So Jordan, I think what you're asking is, do I invest in the projects of other people? So generally the way I've built my business in property is finding fantastic opportunities. So my elevator pitch, if you like, generally is, I use my time, skill, and experience. I find fantastic property investment opportunities. Then I would partner with people who've got those funds so we can share the rewards. Effectively, what I'm saying is, hey, look, I'll find great deals. You bring the money and we'll share the rewards. So that's my offering. In the same way, you need to think about what would your offering be. To answer your question directly, whether I invest with other people, the only people I invest with is people that I'm working closely with in terms of a mentoring or a partnership basis. But generally, for somebody starting out, investing money in their projects is not something I'm necessarily actively doing. But, you have to first of all become investable. What I mean by that is, why would somebody invest in you? So we've all got to start at the beginning. We're not necessarily going to have any experience. So why would somebody invest with us? Well, you might have the drive, the enthusiasm. You might have knowledge that you've been seeking. You might have other people around you that can support you. You might have professionals you can turn to help if you're struggling with something. All these things now start making you more investable, even if you've not got any experience. Sometimes people will say to me, well, I've got no experience, so I'm not investable. Nobody's going to invest with me. But it's the other things that you can bring to the table that you need to be able to demonstrate and articulate, which is why somebody will invest with you. So I hope that helps. Jordan gives you some pointers there. So Instagram, our question from TAN789. What's your view on 95% loan to value? So I think the question that you're saying, everyone's asking abbreviated questions, and I have to try and interpret them. I think the question that you're asking is, what's my view on 95% loan to value mortgages? So these are generally available for people who are first-time buyers or buying their property. The government's been encouraging people to get on the property ladder because properties are so expensive. People are leaving later and later to be able to get on. They can't afford them. They're not able to save the deposits. So the government's making it easier for people to get onto the property ladder with a smaller deposit. Now, if you're just getting started and you're trying to get your deposit together to buy your first property, then of course, I think it's certainly going to help you get on that property ladder. But I would have a longer-term plan. So, if you're purchasing as a home, then it's a completely different thing. But if your plan is to be able to step up, move up the property ladder, get into property generally, then you want to utilize what opportunity you have to be able to do that. Let me explain what I mean. So let's say you get a 95% mortgage, you get your first property, you've got a small deposit you put down. Think about how you can improve the value of that property. What could you do to it to make it nicer, better? Now, based on your skills, that might just be, redecorating it, making it aesthetically look nice, just the way you've dressed it and furnished it. Or it could be that you've got more experience because you've been involved in trades, and it could be that you're converting the loft, for example, into usable space. Whatever way you can add value, I'd think about adding value. And then at some point, which is suitable and convenient, then I'll try and move on to another property. And what you're doing, you've increased the value, you've made some money from that property. And because it's your home, on a 95% mortgage, you're not going to be paying any tax on that because it's your personal private residence. You don't pay any tax on the money that you make on that. So I think if you use it wisely, it can be a good thing. There's still an affordability factor to think about, because it's not just the fact that it's a small deposit. Let's say the property is a £200,000 property. You put a 5% deposit down, which is £10,000. Now you still got to borrow £190,000. So that will still be based on how much you're earning. So, probably 40 something thousand pounds is what you'll need to be earning in the region of, as my guess. I'm not a mortgage advisor, to get a mortgage of around £190,000 as a residential. So, these other factors also need to be considered as well. And generally speaking, you need to have an excellent credit record to be able to get borrowing at that sort of level. So I hope that helps. Let's get our next question. This is from Nora Mullin on YouTube. When will you be doing the workshop for people just sorting out in property investment? And do you have a link to book? So starting out, sorry, let me put my glasses on. So we are running some workshops in December and also in January as well. If you go to our website, sajhussain.com, and under the, I think it's Learn From Me, under Mentoring Calendar, if you can maybe just get that link up and have a look on the website if you can find it. And if you register there, then we'll send you out some details as and when we start doing that workshop. We are running more workshops over the coming week. We're starting to run workshops in the coming weeks. Our focus really has been getting the property meet up and running. This one that we had last week, we had 200 people at that. We're so excited to restart that. I've been running property networking events for nearly 10 years. We've had to take this break for about a year and a half with everything that's been happening with no events. So to restart this event, we've been really excited. 200 people there is absolutely fantastic. It was a great event. In fact, if you were there, just let us know your thoughts on how you found it. So you can get booked onto the next one now. We'll be running them every month from January onwards. We don't do December and August. We start networking from 6:30 p.m. That's a date for the next one, the 18th of January. You can book onto it at sajhussain.com/networking. That link that's just up on the screen now. So that link on that screen is for the networking event. The one below down here is the one to be getting notified on the courses that we're starting to run soon. So let's get our next question up then, please, Khalid. This one, in Kokezi. You've been on before and I'm terrible at pronouncing your name. My apologies. Hi, Saj. Thanks for the free content. While I know there is subjective... This is subjective. How much minimum profit could be considered okay on to buy a single let? Okay, so this is a good question. When you start out investing in property and you buy your first buy to let, what's a reasonable amount of profit to expect? What's fair? What's worth getting out of bed for? What would you invest your hard-earned cash into? And it is going to be subjective, as you've mentioned, because we all will have a different view on what works. The way I tend to look at this is, right, what's the alternative you can put your money into in a safe way, and what kind of return could you expect from those? And when we compare that to property, I think, okay, what, based on my knowledge, experience, how much time I've got available, what could I generate from that? Now, if you're early in your property journey, let's say you're doing basic buy-to-lets, if you're looking around and many buy-to-lets are generating, say, 4, 5, 6, 7% type yield, sometimes you get some places that are much higher, sometimes you get some places that are much lower as well in terms of return, and the risks will vary with those depending on the type of tenants that you have as well with those properties. Now, what I prefer to look at is, rather than the net yield on the properties, my return on cash employed. So what that means is, how much money have I got tied up in that property? Let's say, it's a £200,000 property. I've got 25% deposit down, so that's £50,000 is tied up in that. So what I'm looking at is, how much money am I making for that £50,000 tied up in there? What's the return on that? And generally, for me, it needs to be way above 10% for it to be viable. Sometimes I've got investors' cash in there, so I'm paying them as well. So I want it significantly higher in terms of return. Other people might be happy with 2, 3, 4% because, hey, that's way more than they're getting in the bank right now with the money sitting there. So really, it's where you're comfortable in terms of returns. Some people will look at it as how much cash they've got rather than cash on cash return as a percentage. They're looking at how much pound notes am I ending up with every month. Is it 100 quid, 200 quid, 300 quid, and they're measuring in that way. Now, when I first started in HMOs, my objective was I want £1,000 out of every house. That's the way I was looking at it. That's the return I was trying to create, so that I've got a model that works and I have other people that invest with me in those properties as well. Although I can't give you a definitive answer, I hope that helps in the thinking as how we would work out what's reasonable there. So thank you for that question. Let's get our next question. This is a deal on YouTube. Hi, may I claim expense council tax and utility bills from HMRC during void periods on my buy-to-let? So I think, Adil, what you're saying is you've got operational costs when you've got a buy-to-let. So, for example, when your property is empty, you're still paying council tax, you're paying, gas, electric, even though there might be minimum usage, you've got standing charges on there. You might have water bill that you're paying as well. So you've still got costs that you're incurring on your buy-to-let property that may not be generating any money while it's empty. And if it's during voids, then this is just a normal cost that you can offset. There's no issue with that. The challenge is on mortgage interest. That's where most of the changes happened. You can no longer offset your mortgage interest if it's in your personal name. In a limited company, you can still do that, which is why more and more people buying property in limited companies rather than their personal names, because of this challenge around not being able to offset the mortgage interest. But your other expenses are fine, just as the ordinary operating costs that you would incur. So rather than claim back what you're doing, you're offsetting it against your profit that year, and effectively you're reducing your profit would reduce for that year and the tax you pay on that. So Khalid, let's get our next question up on the screen then, please. Right. Okay, so this is from TM on YouTube. My bridge loan ends in 3 weeks and my refinance has been downvalued by 50K, over 50K. Will you advise I go for an extension in order to get a new mortgage rate offer and accept the downvaluation or accept the downvaluation from the lender? Now, this is a little bit more tricky to be able to answer. So first of all, I can't give you financial advice. What I can do is share my knowledge, experience, and give you information from an educational point of view. You have to do what you feel is right for you. So if you've got a project, let's say you were expecting for a valuation of £100,000 and the surveyors come in, they're valued at £50,000, you are now way down what you're expecting for it to be. So when you refinance and you remortgage that property, if you accept that, you're going to be left with way more money in that than you initially anticipated. Now, it may be that you can afford to do that and you can afford to leave that money in there and refinance with this current lender just to be able to get off the bridge and let just things settle. And then you might wait 6 months, a year, 2 years when your current early repayment charges ends maybe, and then remortgage against somebody else. So your money's now stuck, because that's the challenge. You can't get all your money out or as much as you were initially anticipating. So that money's stuck in that property for a while. And if you can afford to do that, you're able to do that, it's not going to put you in a difficult financial position, then that's worth doing. On the other hand, it may be that your bridging lender is amenable and open to extending the term of the loan. They'll probably charge you some fees to do that. You've got to look at the overall cost. How much is it going to cost to be able to get an extended term with your current bridger? Because remember, bridging is often short-term finance, so they're expecting you to come off it sooner rather than later. So you've got to look at what's going to be the cost and implication of extending the current term with the terms that you have with the bridger. Let's say you do that, but now you've got to have confidence that when you remortgage now with a new lender, that you're not going to have the same problem that you had with the previous lender, where you got downvalued and you got 50K less than what you thought. So you've got to have a degree of confidence that you're going to be able to get a better valuation second time round. That might be because you've got better comparables, whatever it might be. Because if you're just guessing that's what you think it should be, or that's your opinion, well, unfortunately, your opinion is not going to count. It's going to be the surveyor's opinion that counts, and that's what the lenders are going to go by. So that's how I would analyze it, and that's how I would work out which way I would go in that particular situation. So let's get our next question. This is from Adil saying, thanks, may I start a joint venture with you or investment with you? Yes, just have a look on our website, sajhussain.com, and you've got some details on invest with me. In fact, the link is just here. Have a look at that. That tells you a little bit more about how people can invest with me. Generally, if it's a minimum, if you're lending money, 2 projects I'm doing, it's a minimum of £50,000. And if you want to partner in projects where we're sharing the risk and the reward, then it tends to be a minimum of £350,000 for the projects I'm doing. But that gives you a little bit more information there in terms of how I work with investors. So this question is from Omar on Facebook. If house is damaged, do you have to provide alternative accommodation? Can you have a clause in the contract to alleviate this? So I'm making some assumptions now here, Omar. I'm assuming what you're talking about. If you've got tenants in the house and the property becomes damaged, let's say through flooding, it's being flooded and it's not habitable anymore, you will generally rehouse them, put them into temporary accommodation whilst you're sorting out your property. Now, in commercial leases, sometimes you can get to a point where you can terminate it, but generally it's your responsibility. You can't just terminate their tenancy agreement and throw them out because the property is not habitable, because that's no fault of theirs. As a landlord, you're still responsible for that. So just a quick reminder, our next event is on the 18th of January. I'd strongly encourage you to book your tickets early. In fact, book them tonight at sajhussain.com/networking. The reason I'm saying book them straight away, at the last meeting, our launch event, we had 200 people. We had 200 seats, all 200 seats sold out before the event. Then we just get constant messages and phone calls that people want to get in. They're looking for a ticket, but there's no tickets available because they're all being sold at that point. And pretty much since we've been running this event in this format, every single event we sell out. So if you want to be at the meeting, if you want to meet lots of other people, want to network with other people, want to learn from other people, want to learn from me, some of the great speakers I have, then you need to encourage you to book onto the meeting nice and early. Do it today. And it's only £10. £10 for a networking event, in a wonderful location. We provide teas and coffees. Car parking is free. It's a no-brainer. So I'd encourage you to book on to that. Let's get our next question. This is our last question now that we're doing this evening. It's dental employment on YouTube. What could cost in current material and service prices to fully refurbish 3-bed and terrace? I guess this is one of those questions. How long is a piece of string? It's just really not possible to answer something like that. What I can do is just give you a gauge on how much we typically would spend. Some people do a renovation for 30, 40, 20,000 pounds, 15,000 pounds even, and other people might spend 100,000 pounds on a renovation. So to be fair, most of the renovations that we tend to do will tend to spend about 100,000 pounds on a property. So I have a video on YouTube which was released just a couple of days ago with one of our mentees, Ben, where his renovation was 45,000 pounds in a 2-bedroom mid-terrace house that he converted to a 3-bedroom with the bathroom on the first floor, 2 reception rooms, kitchen, which they extended at the back, and that was about 45,000 pounds. It depends on so many factors, how much work you're doing on the property. You're stripping back to brick, or you're just making do with some of the things and patch repairing it to improve it. Your contractors, what they're charging, or you're doing some of the work yourself. All these things are going to impact the quality of the finishes, for example, what you have in terms of what your total spend is going to be. So it's difficult to answer that question directly. It's a little bit like saying, how long is a piece of string? It just really depends on what it is that you're trying to achieve. And of course, where you're based in the country will probably make a significant difference as well in terms of the cost for that as well. And this is one of the things we do on our Inner Circle program. We look at these projects individually, we work through them, we discuss them. Say, okay, what was viable? How could this work? What's the challenge with this? How could we make this better? Is it possible to improve this deal and still make it a deal? Or is it not really a deal at all? Now, my mentoring program, the Inner Circle program, that's the sort of things we focus on there. So that just leaves me to say thank you so much for joining me this evening. What's this? This is the link to the mentoring program. If you want to learn more about mentoring, that's a link that's got the details there on our program. It's just been revamped just now. We're just literally doing the relaunch for that, and over the coming weeks you'll see that effectively it's been significantly improved from what was already there. We've added so many more things into that as well. We've now got our own training suite, so it means we can bolt on so many more things onto that. So that leaves me to say thank you so much for joining me. I really appreciate you taking your time out on a Monday evening to be here with me. Hopefully you found this useful, you've learned something. Please share this with your friends, people you think might also benefit from this. Remember, I'm here every Monday evening to help you with this. And I look forward to seeing you next Monday. But I said earlier, make sure you book yourself onto the next networking event where I'd love to meet you there. Thank you so much.